Ladies and gentlemen, welcome back to Apex Investor, our daily update for Wednesday, March 31st. It's all about GME and AMC, so let's get on with it. GME was trading between 187 to 199. AMC, same thing, trading within a very narrow window of 10.05 to 10.47. Again, we know this is ladder shorting. And well, the good news is, well, here's the bad news. The bad news is that the volume for GameStop was 1/5 of the average. AMC was 1/6. The good news is the float is dwindling down. There's almost no shares available left to short, which means that the shorts will have no choice but to just pay up. My impression is that the short sellers are getting drunk. They're getting drunk off of their naked shorting. It's giving them a false sense of security to the point that their own judgment has become impaired. They've gone insane. And the Mo ass, or the mother of all short squeezes, is going to drive them to bankruptcy and maybe even jail time. The reason I say this is if we look at the chart for GME and AMC, is pretty much identical in general when it comes to the big drops and the big peaks between February 4th. You can see right here, between the 4th, more like February 3 to 4, up to the 24th, we can see that there's barely any price action. It was trading sideways, horizontal trading or short laddering for the most part for those 20 something days. The price was relatively stagnant between $35 to $63, and this applies very much to AMC as well. We are seeing a similar stagnation take place right now. Ladder shorting, I should say, sideways trading since March the 16th. Okay, because we can see a spike March the 10th, but then from March 16th up to now, um, we can see that it was trading between 168 to 224, not including the big sell-off that took place on the 24th. And I believe that before the end of April, we could see a resurgence of GME and AMC to $250 to $300 for GME. For AMC, we're looking $14, maybe even 20, but at least 14. Okay, so that's my prediction there. Again, I'm not a financial expert or advisor. That's just my gut feeling and just looking at the trends when it comes to these two stocks. So let's move on to Reddit now. This might be my shortest video in a while. A first post from Wall Street Bets. GameStop is undervalued considering its online sales numbers and e-commerce focus. Analysts have not caught up yet from the Q4 earning report. And on top of that, all the hiring of Amazon executives and VPs, or former Amazon execs and VPs, and GameStop's valuation is about to explode upward. And I agree. I'm not sure about the number, but it definitely should be a lot higher than what it is currently. And we know it's being artificially kept down, and the price is completely psychological and manipulated by the hedge funds. So let's move on to the next article. This from the same post, the first post. He shows charts here, really interesting charts. One in particular talking about how Chewy grew its online sales growth 17 times greater in 3 years under Cohen's leadership. We're seeing the same trend with GameStop, where their Q4 online sales in 2020 was greater than all of 2019 combined, just in their Q4. And looking at the online electronics and media sales, this is one of Amazon's biggest areas of commerce. And we can see Amazon is number one, clearly. Apple's two. Number three is Best Buy and Walmart. Where does GameStop place? They're actually number 10 in terms of all these different corporations selling uh, online electronics and media. However, if GameStop can position themselves to be the go-to source for not just video games and video game consoles, but also digital PC games, also PC hardware, GPUs, things like that, you're going to see GameStop rocket from number 10 to possibly, much higher, maybe even giving Walmart some competition, maybe even tying Walmart and then leapfrogging Walmart and maybe battling for third place at the Best Buy. I don't see them usurping Apple, but you could very well see how GameStop can enter this fight and take a larger piece of this pie, especially from Amazon. Uh, there's a lot of growth potential for GameStop. So I think in the next probably 5 to 10 years, we could see uh, GameStop being one of the top five. Just my intuition. This is really interesting. It's talking about the Dow Jones. Okay, is this recording right now? What's going on? Okay, this is interesting. It's saying 100 million sell candle at the close on the Dow Jones to the tune of 3.5 trillion. What is going on? I don't know. We're going to find out, hopefully. Okay, so someone is tracking the volume all day, and they noticed that even after hours, they're only at 7 million at 3 p.m. After hours, they did another 0.38 million. So very, very low volume, almost to the point of nothingness. So it's very good actually when you think about it, because they're running out of share to short ladder. So this is only going to bide very well for GameStop and AMC, because the squeeze is coming. That's what it's a sign of. Well, you know what hedge funds are doing? They're literally printing their own money. They can call it shorts, synthetic shares, naked shorts, FTDs. What it is, it's robbing the company who issues shares, no matter what company it is. I'm sure it plays a big part in inflation. Why can't we just call that stealing? When can we start calling hedge funds for what they are? Thieves and criminals. Uh, think of it. What they're doing is basically, if I'm creating counterfeit money, whether it's US dollars or any currency, that's illegal. And that can result in jail time. That's exactly what they're doing. It's no different. Okay, next post. It's a pretty slow news day, to be honest. It's slow in volume and slow in news. So, someone looked into the Dow Jones Industrial Average, and just today there was a big hit, 420 million sold. Uh, I'm not sure what's going to happen tomorrow. We could see a big drop off in the Dow Jones tomorrow, possibly leading to a stock market crash. I'm not sure, but be don't be anxious, don't be worried, because GameStop and AMC, for the most part, will not be affected, especially GameStop. I've noticed AMC is a little bit affected by market movement, not as much as normal stocks, but GameStop is just in its own universe. AMC is a little bit affected. However, it is riding on the coattails of GameStop. So whether your money is in GameStop or AMC, they're both secure. Just GameStop has higher highs and lower lows. So that's all you have to know about that. We have one more post to look at. Yeah, so I think this image pretty much sums up what the day was like. Tumbleweeds, just pretty much a nothing burger today. Nothing really happened today. However, why is this good? Reason? This is the calm before the storm. The storm, ladies and gentlemen, hear me out. The storm is coming. This thing's going to squeeze before the end of April. it's not good to set dates, but I'm just saying it. Comparing to the last cycle when we saw both GameStop and AMC drop to incredible depths. GameStop was just fluctuating within a few dollars here and there. As I mentioned at the beginning of the video, it was between $35, $60 for a good 20 days, 21 days. AMC, same thing, was between, I believe it was $4, $6, something like that, for 20 days. That's where we are right now. And the end of these 20 days, or maybe even a month, will be towards the middle of April, around April 14th. But just to be safe, I'm going to say by the end of April, before the start of May, we're going to see some massive price movement. I'm not saying it's the short squeeze, but we could see at least a gamma squeeze, but we're going to see some major spikes in both of these stocks in the coming days. So stay tuned, buckle up. All you have to do is buy the dips and hold on to your stocks because this is going to take off like a rocket ship to places we've never been before. It's going to make the first squeeze look like nothing. Let me just open the chart. Okay. So I want you all to step into my mind for a little bit. This is why I believe we're going to see a big, massive uptick in the charts for both AMC and GME. So let's open the AMC chart as well, just to compare them. There's we have some ASMR with my beard going on here. All right. So we have the AMC chart, pretty much doing the same thing as I said. Why is it not showing anymore? AMC. So let's look at them side by side here. Or not side by side, but in the same chart. All right. Why is this? Okay, I guess we're just having a bit of a glitch day today. But anyway, oh, there's the AMC chart. It's right there. Okay, so what we're looking at is, do you remember where the stock was right before the squeeze? It was in the 20s and the 40s. It shot up to $100 all of a sudden out of nowhere. And this is what we call the gamma squeeze. And it took place over the course of, what day is this here? I'm trying to look for the date. It's not giving me the date. Oh, there it is. Okay. So the date is January 25th, ending on February the 4th. So that's about a good, that's at least a week. So it lasted about a week, this first gamma squeeze. Compare this, and then we have the 20 days of lull, 20 days of sideways trading called ladder shorting or short laddering. And then all of a sudden, a bit of volume, it explodes right here. This is not a gamma squeeze, ladies and gentlemen. What this represents, this period from February the 24th to where we are now, March 31st, I believe this represents this first spike. If we're looking at a microcosm to a macrocosm, what we're seeing, this little bump here, represents this little bump. So let's just try to remember the shape, if you will, and let's go back to this date. This is January the 22nd, January 25th. So I'm going to go to a 1 month chart and then go all the way back, like I said, to January. And we'll look at the chart much more closely. Okay, here we are. Oh, no, that's not it. All right, we got to go back. Here we are. So we are now in November, December. And again, we're trying to remember the shape. that we saw. Okay, this is July. I don't know why we're all the way in July. Okay, recall the shape that we saw just in the last couple months. So here we go. We're getting closer. There it is. Okay, I didn't do it correctly. I have to go back again to okay, let me pause the video and look for it. I can't seem to find it. So I think I got a handle on this chart now. So this is the lull. This is where right after the gamma squeeze, we see a lull beginning on the February 3rd to 4th, around that area, around that range, and it ends February the 24th, where we see a spike in volume. And that's when it sets it off, and we see the start of some activity. And this is not a gamma squeeze. Again, this is only a little spike, but it's being prolonged over many days from the 24th. So over the course of a month, this is just ongoing, where you see this spike and then it's just stabilizing. We're getting to a period of stability, and the price is stabilizing around what is this? Around 180 to 200. It's stabilizing, and that's without any volume. It's stabilizing it. So what we're seeing, if you look at the volume during the lull period, look at that volume right in the bottom there. During that lull, the stock was stable as well here, but it was stable in the 50s. It was stable in the 30, 35 range to 50, $60 range. What we're seeing here is the exact same thing right now. Very, very low volume, especially in the last couple weeks now. Um, it's very low volume, but it's stable. It's stabilizing. You just need to ignore, if you ignore this part here, where there was a sell off that just in that anomaly, I call it, it really is an anomaly. Without that anomaly, it's pretty much a straight line. It's just like a barcode. Um, and again, recall the shape. Let's remember the shape. There's a little bit of a spike, and then another spike, and relative stability. What we're trying to do is look at a similar pattern in regards to the gamma squeeze that took place at the end of January. So let's try to zoom in here. This is again 121. We're going to try to zoom in there and see, do we see a similar shape at 121? Because if there is, then that just confirms what I'm saying is true, that we're seeing a similar, we could see a similar takeoff very, very soon. Okay, 121, here it is. All right, this chart should get bigger. I'm not sure what's going on right now. Okay, so here it is. So again, we're zooming in. All right, we're trying to remember that first, this first spike. So this is what it is. That's the first spike right here, and this is a price of $72, and then another spike at 120, and then it drops, and there's stability. There's a lot of stability. That's where we are right now. It's going to repeat itself. It's going to cycle. So this is what happened on February. This is what happened in January, but this also repeated itself in February, but on a larger scale, almost more than double. And same thing here. It hit 120, 140, whereas we hit 300, over 300. and then it went down, was being manipulated, and was doing the side trading, the ladder shorting. And then something caught up. It was either a whale or whales that decided to add more volume, and the volume triggered. It's the volume. It's the massive, tremendous amount of volume that brought the price up to shoot up to be to for the squeeze to squeeze, and we can see the gamma squeeze take place right here, and it was really going to 1,000 to convert into a short squeeze, and then with all the hedge foolery, it went down, and so we're just it's like an earthquake, like or someone giving birth, a woman giving birth, and we see like the first contraction. You know, it's not as severe, it's not as major, and what happens with contractions and earthquakes? This is the beginning, and they become more severe and more frequent. But again, look at the shape. I'm just going to close the video with this. Look at the shape. Again, first spike, and then a bigger spike. If I can zoom in a little bit more, that would be appreciated. I don't know if Weeble will reciprocate what I need to look at here. All right, so we are in February. I'm looking for January, the end of January again. There it is. Okay. So you can clearly see the first spike right there, and then a bigger spike going down, sell off, and then we could see trading sideways. So this is where we are right now. We are exactly here. And once we see a little bit of a bubbling, so it's around 80. It's between the 80 to 90 range. And then it took off about 20%. Okay, so once we see a 20%, 20, 30%, and then 50% increase in the price. So once we see the first 20, 30, 40, 50, that's when it starts to shoot up, and it's going to more than double, maybe even triple in the first, once that squeeze happens. So let's look at where we are now. And again, we're remembering the shape. Remember the shape of this activity before the first gamma squeeze that happened in January. Okay, so boop, and then boop, boop, and then flatlining, and then picking up. So where we are is right here. It hasn't picked up yet. Okay, so and then the squeeze happens, the gamma squeeze. So we're going to see this come very, very soon. So what I'm looking for here is a spike and then another spike. Okay, so here's where it started. Here's the first spike, another spike, and then there you go, flat line. Oh, never mind. No, I was wrong. So that was the first spike. This right here is the first spike. This is the first spike. Remember the little dupe? This is it. This is the dupe, and then a longer pause. So time is actually becoming elongated. Like Elon Musk, elongate. So we can see this is the first little spike, and then a little bit of time between that. So the time is being extended here. It's taking slower to take off. And then that's the second spike. So what happened after the second spike before the first gamma squeeze? Flatlining, right? And that's what we're seeing here. Relative flatlining. What we're looking for now is a buildup. We're looking for a buildup. And that's what we can look forward to in the next days and weeks ahead, that this is a flat line. When we see the volume increase 20, 30, 40, 50%, so we need to see an increase of 20%, which when we look at the average, it's about 180 to 200. So we're looking at 20% of 200 is 40. So we're looking at once it hits 240, and then the next one is 50% of that. So 50% of 200 is 100, so 300. So we're looking at The ranges of 240 to 300. When it hits that price, that's how you know the gamma squeeze is happening. It's right about to happen. So that's what we have to look forward to next. I'm not saying it's guaranteed to happen, but that is the most likely scenario if it's going to follow the pattern to a T. Again, I'm not Nostradamus, I'm not a financial advisor expert, but that's what I'm seeing, this kind of pattern of behavior. Uh, it could go to 300, whatever, 400, and then be shorted again to oblivion, and then it's going to go up again. But that's the nature of the stock market. So that's just my gut feeling. Could be wrong. I'm not saying it's 90% going to happen because right now I'm like 50-50 on it. But, with all the DD going on, all this research going on, all this information being revealed about all these hedge funds liquidating and potential stock market crash coming, and even with the Dow Jones activity towards the end of the trading day, it'll be interesting to see what happens. But like I said, I think before the end of April, we should see what I'm saying here, the increase of at least 20%, maybe as high as 50%. So we're looking at a price for GameStop between $240 to 300 before the end of April. In terms of GME, you're looking at a 20% increase as well for both because they pretty much parallel each other. So this price, again, it's around $10. So a 20% increase would be 12. So 12 to 14. We're going to see 12 to $14 price range, maybe more. But I think that's a pretty safe estimate, 12 to 14 before the end of April, so before May. So that's all I have for this video. Thank you very much for your time. Please like and subscribe. Hit the ding dong, hit the notification bell so that you'll get notified as soon as I upload a new video. I think it's very important for this information to be made known to the public, because if we look again, let's look at oh, I'm not looking at the right thing, am I? I'm in the wrong window. Okay. Why am I in the Pirate Bay? Okay, let's look at I'm going to look at GG. So if we look at Yahoo News, Yahoo Finance News, you're going to see AMC. And what they're saying basically is don't invest in these stocks. That's the fear, uncertainty, and doubt that they're spreading, because they know this stock is going to shoot to the moon, and they want as little people as possible to be there, or as least many. They want the least number of people possible to be invested into the stock, because the more people that are adding to the volume will only increase the height of the short squeeze. It's only going to make the short squeeze that much more higher, which whether it is 100,000 per share, again, very realistic scenario for GameStop, or 1 million per share, again, another potential scenario. I'm not going to say it's foolish. I'm not going to say you guys are idiots, because 1 million is actually possible. I'm not going to throw that out of the window, because um, I can't predict the future. I cannot. The stock is going to go where it will go. I can't put a price tag on it. I can only make predictions and share my opinion with you. But, at the end of the day, when the dust settles, I could be wrong. I could be right. But you know what? Let's look at the news. Looking at the news here. Let's see how many negative uh, articles there are regarding GameStop. Okay, it's not showing anything right now. I'm not sure why that is. I did remember seeing some negative hit pieces earlier today. They did say do not invest in these stocks. That's what they were saying. If you just scroll down, won't take too long. I mean, it's not positive, that's for sure. I think it's on Google. It might be on Google. Let's just do a quick Google search and look up GME. Yeah, so GameStop stock. Let's do a quick search and look at the latest headlines straight from the biggest search engine on the planet and see what they're feeding people. There's the mainstream boomer media. Here we go. Let's just scroll down. I won't even click the news tab because that's what they give you. They give you, there it is. Look, sudden halt to earnings call drags down GameStop stock. What to make of GameStop's latest report? Well, it's going to be negative. It's Motley Fool. They hate us. GameStop stock, it's game over. It's game over, guys. You guys are going to get your squeeze. The 3 most dangerous Reddit stocks. Oh, danger. Danger, Will Robinson. You're not going to make money. You're going to lose all your money. Oh, shares. Oh, it popped today, 12.7. Well, actually, NASDAQ isn't too bad. Are you buying GameStop stock? Watch out. Stay far away from the GameStop stock madness. Stay away. Run. Retail investors. Fallout. Okay, I'm not sure. It's probably not negative. But as you can see, the general feeling, the vibe from the mainstream media is that it's a big risk. It's a danger. Game over. That's what they're telling us. And we know that's just not true. I've covered it over the past month and more than that, longer than that, for both GameStop and AMC. I'm very bullish on both. We know these are being manipulated, shorted to oblivion, short laddering, naked shorts, all this tomfoolery, all this ridiculousness to the point that the volume is like almost nothing. It's barely budging. That's showing that they're running out of shares to short because more people are buying them up. You know, they're actually a little, I think they're getting not just a little, they're very scared. They're very afraid as to this worldwide phenomenon. You have people internationally buying up GameStop and AMC because they know what's happening. These people, regular people all around the world, we can stay apes and stupid longer, well longer than they can, uh, remain solvent, and they can pay their interest to their heart's desire, because I know they don't want to. And it's very, to be honest, it's very low interest, but it's going to catch up with them. And when it does, we're going to see, like I said, those two stocks are going to shoot. They're going to bubble 20%, 50%. We're going to see these stocks go to 220, 240, to 300, and then AMC to its respective heights, $12, 14, and greater heights. And then the gamma squeeze will happen. The short squeeze will happen. It'll be too late. It'll be too late for the short sellers, for these hedge funds who are going short on GME. It's going to go to 1,000. AMC is going to go to 40. And by the end of the first short squeeze, once that, I don't know how many short squeezes there are going to be. I mean, people say, oh, it's going to be the mother of all short squeezes. And then the end, we don't know if there's going to be another one. There could very well be 2 short squeezes. I don't know. Could be 3. I don't know. Maybe it's multiple short squeezes. Maybe they're going to short the short squeeze. But the thing is, in order for AMC, this is very, very important for people to realize, especially if you're all in on AMC. One of the most important things to know is for AMC to go to the moon, GME has to get there first, because all these retail investors, such as myself, when I cash out at 100,000 per share, and let's say I have 10 shares, so I cash out, 10 at 100 grand, that's $1 million. And I'll see AMC at 40, and I'll say, you know what? I'm going to move that stock. We're going to move that stock, and I'm going to buy $1 million worth of AMC stock at $40. Before you know it, it's going to get to 1,000 as well, because they've been shorting both to oblivion. They're going to get their just desserts. So that's all I have for you. I'm going to drop the mic, and I'll see you tomorrow. Apex Investor out.